Hey guys, so my name is Kevin. Welcome to this new series of learning institutional trading. And in this part, we will be learning about market structure. Okay, so this will be the first video of market structure. It will have two parts. Now, what is market structure? Market structure is a simple and a basic form of understanding of how markets move. Understanding how markets move will give you an edge on how the market will move in the near future. Okay, so simply saying, if you open up a chart and you get confused about what the trend is, market structure will help you identify the trend. Okay, so this will be in the first part. We will be identifying the current trend of the market. Okay, and in the next video we will be discussing about when the trend is likely to change. Okay, good. So the first thing, so there are three trends. Okay, bull trend, bear trend, or sideways trend, also known as uptrend, downtrend, and a ranging market. So first one is bull trend. Okay, so bull trend is depicted by a series of higher highs and higher lows. The trend will continue in that direction until a lower low is presented by the asset price. Okay, so let's only focus on the first part. A bull trend is depicted by a series of higher highs and higher lows. Okay, so what do I mean by that? So imagine, imagine if a stock is moving up. Okay, it doesn't move just like this. Okay, it has to move up, down, up, down, up. Okay, it moves like this. So here is a symbol depicted of uptrend, and in this uptrend here is an impulse move. Okay, and this is actually a corrective move. Impulsive move, corrective move, impulsive move, corrective move, impulsive move. That's how a bull trend will work. Okay, so in this impulsive move there's a low here and there's a high here, because this is the lowest price and this is the highest price of this impulsive move, and in the next a corrective move will occur. Okay, so this corrective move and then forms an impulsive move here to form a higher high, to form a new high. Okay, so in this impulsive move this is the low and this is the high. Okay, so in this impulsive move this is the low and this is the high, and in this impulsive move this is the low and this is the high. By why did I wrote it as higher low or HL? Okay, it means that when compared to this low is higher. Okay, or this low is higher than the previous low, so it is known as higher low. Now why is it called higher high or HH? Okay, so this high is higher than this high or the previous high, so it's known as a higher high. Similarly, the market retraces back or corrects and then forms another impulsive move. Now this low and this high. Okay, so this high is higher than this high, so it's known as a higher high, and this this low is higher than this low, so it's known as a higher low. So this is the basic representation of a bull trend. Now the clear opposite is of the bear trend. Okay, so a bear trend is depicted by a series of lower lows and lower highs. So this is the high formed and this is the low formed. The market doesn't move like just like this, it has to move up, down, up, down, up, down. Okay, so this is the impulsive move and this small one is the corrective move. So in this impulsive move this is the highest priced and this is the lowest price. Now it corrects. Okay, and then impulses again, so this forms a new high. Now since this new high is lower than this high, it is known as a lower high, and this forms a new low. Now this low is lower than the previous low, so it's known as a lower low, and then again corrects to form a lower high and a lower low. Now this high is lower than this high, so it's known as a lower high, and this low, okay, so this low is lower than this low, so it's known as a lower low. I hope you understand these two parts. So moving on to the third thing is a sideways trend. Okay, so in a sideways trend there is pretty much nothing to really understand. It's just that there will be equal highs and equal lows. So basically retail people treat this as support and resistance. It's not actually support and resistance, it's actually equal high and equal low. EQH means equal high and EQL means equal low. So if a market forms this high and this low and then retraces or corrects to form again the same high and then again the same low, so if it goes like this is known as a sideways market. Okay, so let's move on to the chart and identify these things. As you can see, in the first case we have a Reliance chart, 1-day chart time frame, and we have corrective move, impulsive move, corrective move, impulsive move, corrective move, and then formed an equal high, equal low here, and then again a new high. Okay, so it went just like that. So from this part onwards, here we have an uptrend. Okay, now I'm gonna leave that part. You again have an uptrend over here, impulse, impulse, correct, impulse, correct, impulse, correct, impulse. So similarly a bull trend can be found. Okay, so let's move on to a lower time frame to identify. Okay, so here you can actually see that we have a downtrend. Okay, so first we formed a sideways market and then a downtrend, lower highs and lower lows, lower highs and lower lows. So similarly you can actually identify the trend of a market. Okay, so let's see Nifty. If I'm moving on to Nifty, okay, maybe Nifty futures, because I have drawn a lot of things there. Here also maybe delete everything. And okay, so in a 1 hour time frame what I actually see is up, down, up, down, up, down, up. So if you identify this market as a ranging market, then congrats, you actually understood market structure. Okay, because this is forming equal highs and equal lows. So that's all for this video. I hope you understood this part. So this is a change in structure forms. So thank you. If you like this video, please subscribe to our channel, because here you will get a lot of free learning, and also in the link below you will find, you can actually join that, and there will be 3 to 4 sessions per weekend in order to clear your doubts and all. Okay, thank you.